Good afternoon, everybody. Welcome to Trader Merlin Show for your Monday edition. Hope you had a great weekend out there. I did at least some more social things. Hopefully continue more social stuff, right? Got to be more active out there, enjoy the beautiful Southern California sunshine. As you guys know, occasionally I like to make wagers with you, and if there's ever a wager you guys want to make, I'm happy to go for it. And one I've made a couple of times with Big Eb, I lost twice. So I owe Big Eb a couple of beers, and it was nice to finally repay my debts. I hate having looming debts over myself, so I was going to share a little picture of here's Big Eb and I in San Clemente this weekend. When we shared a couple of beers and some lunch, so it was just a great weekend. Not only to pay my debts, but also to meet somebody who's been supporting the show for many, many, many years, as many of you have. And unfortunately, most of you don't live anywhere near where I live. Otherwise, I would probably go out and have more beers with you guys more often. So just a thank you, shout out to Big Eb for driving all the way up from San Diego to have a beer with me. I appreciate it. And for all of you, thank you for all your support and everything over the years. And who knows, maybe down the road we'll have some beers one day. And again, if you have a wager, let me know. I can repay it some way, even if you live across the country. All right, let's dive into our topic for the day. Obviously, the big deal going on is what's happening with the trade war situation. The big deadline looming was going to be August 1st. And there's four big pieces to this that, at least in my opinion, are the ones that are going to cause the most uncertainty. Number one, still uncertain, is China. Number two was the EU, and then you have Canada and Mexico. These are the largest trading partners for the United States, and they're the last holdouts to a trade deal. Now, the numbers that came through today for the trade deal are pretty interesting. I really like it. I like what it is because I believe it just removes uncertainty. It starts to maybe rebuild a relationship that we have with the European Union. Now, granted, there are people who are not very happy with this. There are people who are upset with this bill or this trade deal because they feel it favors the United States. And when I look at some of the numbers, I haven't dove into the entire thing, it feels like it does definitely benefit the United States. So the gist of it was, before Trump, average tariff on European goods in the United States was 1.2%. Now they'll be 15. Now that's great because at least it's not 30, right? So that wild card of we're going to do 30 or 50%, whatever Trump throws out there, now it's down to 15, which seems to be the number that most countries are getting, is a 15% tariff. So for me, I think it's fine. It doesn't seem like it's that usurious. For the U.S., it's probably a good thing. It increases competition, gives the American companies a little bit of an edge. But if you're an automaker like Volkswagen, you had very low tariffs, and all of a sudden you're going to have a 15% tariff on your vehicles. Or if you're a French cosmetics firm who has been sending, hundreds of billions of dollars a year of cosmetics to the United States, because unfortunately the Kardashians make all you women feel like you have to wear makeup all the time. Just be yourselves, be beautiful. You're all beautiful. Those things could also start to hurt their bottom line. So not only do I look at it as there's broader trading opportunities, but when you whittle down to things like Estee Lauder or companies like Volkswagen, there may be an opportunity there for shorting opportunities. I mean, why not? If you know their profit margins are going to drop by 15%, then there could be some opportunity out there too. So that was the overall gist of it. Now, I don't... only one I have up here is the DAX. Unfortunately, I just have the DAX up here, but this is the German exchange. The DAX, of course, we wouldn't mind looking at the Euronext. Maybe it gets just a broader picture of the entire EU. A bad day for the DAX, down 1.02%, and we can look at some of the specific companies here in just a second. The other piece that I wanted to get to that was in this agreement, which I thought was interesting, is the EU commits to buying $750 billion worth of energy from the United States. So that's great because that will help diversify energy demand over in Europe. That demand may be taking away from Russia, right? It could be a big piece there. The other part was that the European Union committed to investing $600 billion in American infrastructure. Okay, great. Not definitively locked down what exactly it is, but having foreign investment coming into America obviously is a fairly good thing. Now, here's where it gets interesting, at least in my opinion. It feels like we've gotten this agreement accomplished. It's pushed it through. We'll go 15% tariffs. Okay, fine. Obviously, some companies are complaining because it was 1.2%. Now they're paying, 13.8% more. Sorry, 14.8% more. No, 13.8% more in tariffs than they would have before. That's going to hurt their businesses. So yes, you'll have some unhappy people. the terms and conditions of this were that the EU had to spend some money on U.S. infrastructure. Now, how is this going to work for China, where we've been telling them, no, we really don't want you buying our land. We don't want you buying American businesses. Does that kind of agreement piece mess up the trade deal with China? Because obviously we want a trade deal with China. Maybe this European one will kind of push that through a little bit more and get closer. We still have right now with Canada 30% tariffs, Mexico as well. Maybe we'll reach some agreement here in the next couple of weeks, hopefully by August 1st, where we're all down at 15% across the board, and then we can move on to bigger and better topics and put this behind us, have a better idea of what the impact of tariffs are, as well as the inflation rate. So all in all, I look at the news today, and I thought it was pretty good. Yeah, nothing's final. Of course, there'll be some back and forth. There's nothing 100% final. I thought it was a bit more than a framework. I thought that this was actually much further along than that, but I could be mistaken, Lisa. You're going to have people who complain about this for sure. There's no doubt about it. There's always going to be somebody who's going to lose out on these deals, and ultimately, what does it mean for our markets and how can I trade to make money off of it? So one of the things I thought was interesting today is if you look at one of your biggest gainers on the session, the dollar. Dollar was up 1.0% today, one of the largest green candles we've seen in quite some time, and it rocked it right up to that kind of downtrending peak we have. So if you go back to our high here on the dollar index back to July 17th, that high price was 98.95, and today we are right now at 98.65. So we could see that challenge, that high point there, within the next day or two. What I'm struggling with myself is this dollar has been in a very pronounced downtrend for quite some time. To me, the trend is your friend till the bend at the end. You've got to just kind of keep on going with that trend. However, that agreement today does put a little bit more weakness on the euro, puts a lot more strength on the dollar, and this may be a turning point, right? This could actually be that factor that starts to push this dollar back up and kind of get it going to new highs. And I saw that Chad says, the Dixie rally not good for my shorts. Yeah, definitely not. If you're short on that dollar, absolutely not. So that is your high level piece of the trade deal and kind of how it pans out. I do think that this sets up to be a broader good thing for the U.S. markets, equity markets, predominantly because of the uncertainty that it's out of the way. So we got three players left. China, Mexico, and Canada are the big three that we still have to push across that finish line. Jimmy T says, how do tariffs impact small businesses? I think it depends on what the small business is, right? If you are an exporter, well, to Europe, probably not going to have too much of an impact for you right now. There may be Europeans are very proud people, and there may be some backlash there where they start to say European pride and we're not going to buy American goods and services. So if you're a small business doing business in the United States, I guess it depends on what type of business you're in. Are you in automotive manufacturing? Are you in cosmetics? Those types of things is great for you because now you have a little bit of an advantage because your opponent who's sending in your goods and services from out of country, those costs went up by 15%. Now, if you are relying on imported goods from Europe or other countries that now have these tariffs in place, it's not good for you, right? Because your cost of goods is rising. So let's say I'm a packager of cosmetics. Okay, I buy all these cosmetics from Paris, France, and I relabel them here in the United States as my own, and I resell them. So now I have to pay an extra 15% for everything that comes in. So obviously, Jimmy, in that respect, this would be horrible for small businesses. But again, all depends on what business that you are in. If you're an exporter, I think it's actually fairly good because you're reducing some of the competition from the European brands, and the doors have kind of remained wide open for the U.S. So I think this is overall good. What do we have here? What was the question? What to do now? Well, what to do now is just kind of sit there and look this tariff as VAT for the U.S. Yes, I think that that's exactly what it is, Andy. It's just a value-added tax. And ultimately, who's going to pay the price? You and I will. So when we get these new Volkswagen models that are manufactured in Europe and come over here, those cars are going to be more expensive. So if you're a Volkswagen lover or a BMW or a Porsche guy, this may be add some extra cost to your purchase. However, some of those vehicles are made in the United States and therefore may not be as impacted. Some of the parts may come from Europe, so it makes it a little bit convoluted knowing, okay, is this an American Porsche or was it manufactured in Europe or are the parts getting tariffed? either way, I think that the cost for any of those German vehicles will go up slightly, if not significantly, by 15% based off the tariff. So, and that will be a while to, I think, see the at the bottom line of our markets. But ultimately, that will be a consumer paid tax. We will pay that extra 15% on those goods and services. So that is done. As far as what to do, what was it? Mr. Bacon. What to do? Simple. Just look at this chart. Follow the charts. We'll run through these markets here in just a minute, but you look at what's going on with the dollar. You've got to stay short the dollar, but right now you're getting very close to getting out of your shorts in the dollar because it's just about to break a swing high. If you look at what's going on with the equity markets look fantastic. Les sent me a message this morning, talking about this pattern here on the S&P, and at that time it was a little bit deeper into this candle here, and if that continues, right, if we continue to see this red candle close right in the middle range of Friday's candle, that's what's called a dark cloud cover. And typically what that means is you're going to see a follow-through weakness day the next day. Of course, that's just historical. That's what the statistics say, is that a dark cloud cover will lead to a second bearish day, and we'll have to wait and see. All in all, the reaction this morning was fantastic. We had a nice gap up. I sold some covered calls on my positions, and then the market started to sell off. Now, there's multiple reasons. Well, there's one big reason why it sold off. But before we get there, let me read these questions. Kenny says, I don't think the cost of a new Porsche could go higher. Oh, it can, Kenny. You know it can. That cost of that Porsche can go higher and higher. And see, for a Porsche guy, for someone who's a Porsche connoisseur, if you are buying something that's from Germany, you might be paying 15% more. But, for most luxury car people, they don't care. They got the money, right? It's not that little 15% tariff's no big deal. So, as they said, the cure for a high price is a higher price, and those tariffs may start to impact Porsche, Volkswagen, especially anything coming from Europe. Les says, what might this do to NVIDIA? It's a good question, and I don't know if I have an answer to that one, Les. If a European company is buying, chips from Taiwan Semiconductor and then sending them on over here, and they're competing for the same space that NVIDIA is competing in, it's actually better for NVIDIA. As long as NVIDIA manufactures those chips in the United States and exports them, great. You have STM. There's a big tech firm over there. I think out of Amsterdam or Holland. Their exports are now going to go up a little bit. So I think that it's actually good for NVIDIA because the competitors out there are now, if they want to compete in the U.S. markets, their product goes up by 15%, which could drive more people to NVIDIA. But here's the real issue with NVIDIA is, where else are you going to go to? We talked about this before. Big Ab's got a smile on his because of NVIDIA. Yeah, NVIDIA, another all-time high today, just rocking. And again, I think that this whole deal is part of the reason you saw this happen today. It was a 1.87% gain for NVIDIA today. Why? Because NVIDIA, anyone wanting to come in from an external market, if you're Canada, you're going to have to pay tariffs. Let's assume you're a tariff semiconductor chip company. You want to come into the United States? Hey, nope. Nope, not going to happen. You want to do Mexico and you're a semiconductor chip company, you want to go to the U.S.? Oh, 30% tariff. So all of that just bodes well for NVIDIA, in my opinion. It hurts their competition quite a bit and puts more focus on them. Now, I've mentioned this before, but NVIDIA it doesn't have a customer problem, it has a customer support problem. And they can't service all the people that want to buy NVIDIA's equipment. So even if you have these European chip products coming over to the United States and they're getting higher price, even if the people said, I give up on buying this higher price European product, I want to go with NVIDIA, you can't. There's just not enough inventory to satisfy all the demand that NVIDIA has. And hopefully they were going to ramp that up, but there you go. Oh, Steve, you did? You went to the Sphere? Did you see a concert, or did you just see their standard, movie? So Steve, I told Steve when he's in Vegas, he's got to go to the Sphere. So it's just one of the most amazing venues you've ever been to. Pretty good. Going to be interesting to see how many car parts are U.S. made and how many new. We're spinning. Well, that's wonderful. Great. You're back. So I'm just going to do a real quick speed test. Yeah, I see I'm back now. For some reason, I saw my computer freeze here. I'm just going to real quickly run a test. I should be No, it was on my end, Lisa. I saw something flash over here. But let's see. And I'm running I'm okay. It's way slower than normal. That's for damn sure. I'm way slower than normal. But still over 230. So we should be good. And it looks like it's frozen again. All right. Well, I'll just keep on rolling here. Where were we? We were talking about NVIDIA and their kind of dominance. Well, I think that's going to continue. Again, we've been positive on NVIDIA for quite some time. I can't see it going down at this point. This European deal is great for NVIDIA. All right, since I'm on here, let's just go up our list and go through our top 8. And then I'll cover some of the minor additions to my portfolio today. Gold. It started off as a really strong risk-on day. You look at the equity markets, we gapped up, and I was like, oh, okay. I thought it was looking much more optimistic today, and then it just gave back most of those gains. So all in all, so I had to check my speed test there real quick. My ex went to it's hard saying that one. My ex went to the Backstreet Boys. Absolutely loved it. Make sure you wear white. Go. Absolutely go. It's a phenomenal performance from what I've seen. All the video, pictures, and everything. So gold on the day, we had that big gap up in the equity markets. Gold didn't really didn't fare that well. I thought that we would actually see it rebound more near the end of the day, but it didn't quite get there. So all in all, you have gold in a pretty ugly 4-day sell-off coming right back down towards that 3,270 line on your screen, which has been there for quite some time. We'll see if that one holds. But for you long people, it looks like a great opportunity. If not, it's just traversing sideways really for the past 3 or 4 months. Your Russell 2000, almost unchanged on the day, just 0.09% down. Nothing to speak of there from a technical perspective because we're just traversing sideways, so no big deal there for the Russell 2000. Your S&P looked great. We already looked at this one, kind of like a little dark cloud cover, gapped up, looked absolutely fantastic, and then started to sell off most of the day. I missed a trade this morning. I'm kind of happy I did. I wasn't in front of my computer. I had an alert set on the 5-minute time frame for when we broke the morning's 30-minute low. And you can see here that 30-minute low was right around 64.24. And it broke it on one candle, a really aggressive candle, but then just whipsawed right back up. So that probably would have cost me money, so I'm kind of glad I did not get filled. It was just an alert. I didn't have a bracket order in place. I just had the alert. So, all right, what else do we have here? NASDAQ 100 keeps on trucking. Let me go back to our daily here. This is just an unbelievably beautiful chart. Not that one. There you go. But one thing that I will say is you look at the last 3 sessions here, while we've had decent ranges, most of them have ended with an indecision candle. So the last 3 days, Thursday, Friday, and today, is uncertainty. All right, we don't really know which way those markets are going to go. Today, even though it shows a red candle, NASDAQ was up 0.3%, but there's a lack of clear trend and market strength, or weakness. There's neither of them represented here. It just kind of gaps up, whipsaws a little bit, and then stays the same. That's usually not a good sign for a big trend, which obviously we want to have a much bigger trend. A lot of indivisible in those candles. What are you going to do? I have AT&T Fiber, guys. I do have AT&T Fiber. I need to call them because for some reason my speed test, I pay for a gig. So you guys can see I pay for a gig and I'm getting 293 down, 139 up. So I'm not sure why my show skipped today. It shouldn't have. This is pretty solid connection. All right, our 10-year. We had a slight increase today, 0.64 up on that 10-year yield. 4.14% is where we're sitting at today. Again, nothing that noteworthy. It's just chopping back and forth, so we'll move on. Bitcoin. I was much happier with Bitcoin earlier in the day, but 119 is where it's at right now. 119,000 was up 1% on the session. Looked decent over the weekend, starting to move up, but again, nothing's really going on here. It's just traversing sideways and sitting there doing nothing. So hopefully we can get a breakout to the upside, which I do think is coming. But today's activity, fine. I'm fine up 1%. I did sell some. I sold the 66 IBIT. So the 66 IBIT puts expiring Friday, which is part of that wheel strategy I'm doing just for the IBIT account on another one. Dollar index, the Dixie, we already looked at that. And then crude oil. So this is the other big story of the day. You had an ultimatum given by President Trump. And it was supposed to be like 50 days, like end this war over the next 50 days, And now it's stepping up to 10 to 12 days. So that puts a timeline for us sometime next week where we could see the president really slap some big sanctions on Russia and play hardball with them. I think inking the European deal is good. Well, getting the European deal situated, let's ink it and sign it all up. Because once you have Europeans in our pocket and on our side, then if we decide to go after Russia more aggressively, Europe will back us and we'll help them out. So that was a very strategic move. But the crude oil price today was up 2.38%. There's a big fear that this could be a disruptor for oil, especially if we start slapping major sanctions on Russia, which, I'm hearing 300% numbers, which would be just crazy. But that could certainly cause more upside movement here. And I guess once we get the uncertainty of the tariffs out of our hair, well, then why not start a war and go after Russia, right? I think that's the attitude here. Let's just play hardball with Russia and get some peace over in Ukraine. So that was it. Let me... Rob says, do you have any recommendations on good books about crypto? I'm mostly interested in learning more about Bitcoin, Ethereum, and also open to other parts of the crypto world. I think, was it Safedine Mahmoud? I forget his last name, but Safedine has a book called, I think it's called The Bitcoin Standard. One second. I listened to the audiobook of it. It's pretty good. It's definitely a good book. Bitcoin. It's called The Bitcoin Standard. Yeah, here you go. Gentleman's name, Safedine Amos. So that's the Bitcoin Standard. You can probably get the PDF somewhere. That to me it's just all about Bitcoin. I haven't really found anything that's on Ethereum, dedicated to Ethereum, but I think there's also an Ethereum standard written by Safedine. Let me just real quickly check out. And again, you can download the PDFs for free online. No, just Ethereum merch. Let's see. Do I know any of these people that wrote these books? No. Oh, this is the one, Mastering Ethereum. So Andreas Antonopoulos, he has one called Mastering Bitcoin 2. I read the Mastering Bitcoin one. I will tell you it's very, very difficult to read. It's very technical, but I really like Andreas Antonopoulos. Gavin Wood is also one. He was one of the founders of Ethereum, and he also started Polkadot. Polkadot is the one that when he left Ethereum, he went to create. So Mastering Ethereum would be another really good one for you. Where's my book, Glenn? Man, I'm telling you, I can't seem to finish it. Especially with what's going on in my head right now, I'm a complete mess, and I'm trying to get my wheels back on the ground to run in my normal pattern of positivity, optimism, and drive. So yeah, right now, probably not going to finish that book anytime soon. I want to, but I every time I sit down to write, I just get totally distracted, and it's just not working. So, but I continue you pushing, Glenn. Keep pushing. Keep reminding me. It just makes me bitter that I'm not finishing it. I just have to finish it at some point. I will. All right, so those are the two books there. Let me real quickly walk you through the trades I had today. So as you guys know, I was exercised at 410. I don't know why I put CB. Oh, cost basis. So CB is my cost basis. It's not just that life gets in the way. It's just this is a very difficult period of my life. It's just been real tough. So yeah. So, but we'll make it better. Lynn Alden's Broken Money is not really about Bitcoin, though. That's about money and the overall, how money functions, how it came to be. It's a good book, although I have to say I haven't finished it. Yeah, I've not finished that one. Okay, so I was exercised MicroStrategy at 410. If you take out the premium I already collected, my cost basis is 404.75. So today I sold the 425. Oops, I don't know why I put CP on there. I sold the 425 calls against that position. So I am currently, I actually thought we'd see it have more of an upside move today. So there we go. So I have the 425 calls. Let me just show you what that looks like so we can kind of see MSTR. And let me redo some of these numbers. So you can see the red line down there is the 385 line. I still have some puts at the 385 strike that I sold and collected 432. So let me just change this for you guys, 425, and then share the chart for you. So the blue line represents the call option where we get taken away, and the red line down at the bottom is the put where I would be acquiring some more MicroStrategy because I am bullish on Bitcoin, so I'm fine with doing that one. And there we go. That's that trade. I also still have the Tesla. As I mentioned, I sold the Tesla 290 puts last week. I don't think there's any chance of me getting exercise on those, so I'll collect my 1.25% for the week, which is great. And for now, that's it. I didn't see anything that was really drawing me in today other than that S&P trade, but yeah, didn't take it. Now, since Rob is on that topic, yeah, you had Tesla's up 3.02% today. Fantastic. Leading your Magnificent 7, but also NVIDIA broke through Big Eb's limit of 175, and we're just rocking. He said 175 to 200 by January 26, and we are so far beyond that now. It's great. Not so far. We're at 176.75, so great move up there. Meta was up positive today, 0.69%, but it actually has a bearish candle on it. Amazon looking pretty good as well, but the same spinning top as we see with the broader markets. In your loser category, you've got Google, which still an uptrend, so not that big deal. And then you have Microsoft. So everything's still looking absolutely fantastic on these broader markets. So let me go into a couple questions here. This is a long one, so let me read this from Mark J. He says, with the Fed refusing to lower rates and with the looming inflation risk over tariff war with China and the consistent extensions we have, couldn't Jerome Powell simply lower the Fed rate with the clear understanding that rates would be changed after the tariff has been established? Seems a little ridiculous that we can't lower rates because of something that may happen in the future when the Fed retains the power to change rates whenever they please. Will you please provide some more insights on this one? Well, yeah, certainly Jerome Powell could knock those rates down today if he chose. He could make an announcement right now and say, I'm cutting 50 basis points. However, one of the roles that I think is overlooked here, that there's two roles of the Fed. Number one is to maintain a stable price, right? So that means fight inflation. And number two is full employment, meaning people have jobs. I think there's another implied one here, which is to not cause too much shock to the market, to not have a situation where there's such a disruption that people are freaking out and causing chaos. So if Jerome Powell were to arbitrarily, even though the data might support it, which is our unemployment numbers are decent, inflation's okay, it's starting to rise though. If he were to arbitrarily say, I'm going to lower rates, obviously Trump would say about time, you're doing what you should do. But it does increase the risk that inflation is going to be higher down the road. When you lower those rates, it adds further gasoline to the economy, which is what Trump wants, but that also is a double-edged sword. It could cause inflation. We still don't have decisiveness on tariffs. Now we got 15% for Europe, we got 15% for Japan. When we lock in China, Canada, and Mexico, and those are locked and sealed, then I think it's much easier for Jerome Powell to say, okay, now we can go. Because if Trump starts slapping, 50, 60, 70% tariffs on China and playing hardball again, total economic uncertainty. And you want to have flexibility with your rates to lower or raise as needed to accommodate what the market throws at you. So many people are complaining and saying, Powell needs to lower rates. Powell needs to lower rates. Really? Really? Look at the market. How can you make an argument that Jerome Powell has to lower rates? I'll put this on a weekly time frame for you. Our markets are suffering. Really? No one here should be arguing that we're suffering economically. It looks pretty darn good. So I personally don't think that he should be lowering rates. I think lowering rates should be kept if the economy starts to struggle, or if we see high inflation, or if unemployment. If high inflation. If we see low inflation, you can cut rates. If it's high inflation, you actually should be raising rates. And the inflation numbers have been moving up. Now, the other part here would be unemployment. And, we have this Friday, we have our first unemployment number of the week coming out, and I'll show you that right here. The expectations are we're going to see some unemployment increase from 4.1 to 4.2. Now, that's no big deal. It's not like it's a huge jump. However, you can see here, we've been flat. If it jumps out to be 4.2, that kind of puts us at the norm that we've seen for the past, let's say, year. If it comes out at 4.3, that'd be the highest point over the last year. After that, now you're looking at, we're much higher than before, okay? Show 10, is that a specific chart you want me to look at there? I think you're looking at, you want to look at the 10-year bond, is that what you're asking me to look at? Over the weekend, I read an article where Bitcoin will, so let me get to Bitcoin here in just a second. Mr. David, lower rates, inflation rips higher, the dollar loses purchasing power faster. Correct. And again, it's no winning situation, so I think the prudent thing to do here is wait because you just have so much. And Mark, I see where you're going with this. Why not just lower rates, and then if the tariffs are an issue, then we can raise them again later. But why have to rock the boat that much? Because remember, it's not as simple as I just lower the rates and the market rallies, right? There's a lot of other factors there. There's a lot of pieces that need to filter through and take time to get to the bottom line of the economy, to the end of the economy, meaning taxes, earnings, dividends, payments, income. That all takes months and months and months to go through. So if you push that through quickly and then bounce it back the other way, I think that creates more problems than it's worth. Okay, so you wanted to go deals. Okay, cool. I wasn't sure which one you wanted. Our yield here is really not that big of a deal. I was expecting this 10-year yield to be surging more and moving higher and higher and higher, but we have not seen that. So that's actually a good thing. The higher this goes, the more uncertain and the lack of confidence the consumer has with the United States. Otherwise, looks okay. We'll figure it there. So, Mark, I hope I answered your question. There is no right or wrong answer to it. You're either a supporter of it or a hater of it. And, Trump definitely fuels that narrative. So does Senator Lummis on her Twitter feed that Trump is incompetent, or not Trump, that Jerome Powell is incompetent, that he's, ineffective and he shouldn't have his job, he should be fired. And I disagree with that. Even though I'm not a huge fan of the Fed, I think that he's done a pretty darn good job. And it's an impossible task. Like I said earlier, you'll never please everybody. So hopefully, whether I like Powell or not, what I don't want is I don't want the system to be shocked one way or the other. I'd like it to remain even and slow and build over time, as opposed to have an event that could cause significant harm to the economy. And like I say, the chart of this market looks absolutely fantastic. It's impossible to look at this and go, oh, we're not looking so well. No one, if anybody were to tell you that, you got to be like, okay, you have no clue what you're looking at. The markets are at all-time highs. Most economic data looks absolutely fantastic. GDP, we'll see what happens with our advanced GDP. I think that comes out Thursday. Let me just real quickly check here and make sure. And we got our core PCE next Thursday too. Wednesday is another just gigantic day for U.S. markets. We have a rate announcement. We have an advanced GDP. And as long as that advanced GDP pops back up above zero, I think we're okay. Rob says, sideways, balance, in the neutral in the middle. Yes, I'm right with that. Let's stay neutral, right? Let's see. What was my second question? Naum says, any word on losing your Bitcoin if you keep it with the broker and don't use it during a period of time? No, I think that this comment has been taken out of context. Apparently there was something in California where it was a bill passed, and in the bill it says if your Bitcoin or crypto is left dormant on an exchange for 3 years, they can confiscate it. No. I think it's taken out of context. It's just like if you have money sitting at a bank and your account is idle for 3 years, people die and accounts just sit there. So there is this piece that over time, these accounts that are unclaimed will go to, I forget, there's a California office. You can actually look up what you had. But it basically is a custodian for lost assets. And with your social security number, you can reclaim it. So your bank will send out. So if I had Bitcoin sitting on Coinbase, for example, and it's been there for 10 years and I haven't touched it, technically this government agency could say, hey, that hasn't moved in 10 years. Alert the customer. Are they still alive? Right? It's a pulse check. So once unclaimed property market, that's what it is. And if Coinbase sends out an email and tries to contact you and saying, hey, your account's been inactive, it's going to be put on hold, and you don't log in, then yeah, those assets could be taken back by the government. So, but it's not that they're just counting down the clock and like, hey, now this account's got a whole bunch of Bitcoin, let's just take it and confiscate it. No, this is typically what happens when people die. I know, or you just forget about things, right? There is if you guys go to unclaimed property in your state, if you live in Texas, do unclaimed property Texas. If you put in your name and information, you will see there's typically assets that are there that you're like, I didn't know that I had unclaimed property. And that's one of it. Exactly. It's sent to the state government, Rob. Yep. Exactly what it is. Last one. I think I already covered this. Are inactive Coinbase accounts tracked? I don't know 100%, Chad, but I'm going to assume so. Everybody tracks inactive accounts, right? Every financial firm has a metric of how many inactive accounts they have. Let's see. Here's one last one, and then I'll go to your open questions and see where we stand. And I can't remember whether I read this one. I don't think I did. Paul says, in a black swan event, China invades Taiwan. Which companies fill the gap for chip producers? Does Microsoft, Meta, or others look to bring production in-house? Is that possible? Investment for SoftBank to make this possible? If that black swan event, Paul, happens, like I've been thinking that there is a slim chance it could happen, where China basically says, Taiwan's ours, and Taiwan Semiconductor, because America's playing hardball with these tariffs, and we got the 50, 80, 100% tariff, we're not going to allow Taiwan Semiconductor to send chips to the United States. How do we fill that shortcoming? Well, we're not going to. We'd have to get them from other European partners that might be manufacturers. We have been attempting with the Semiconductor Act or CHIPS Act to bring a lot of production and development of technology to America. But as many of you have pointed out, and many of you are in the industry, know way more than I do, those facilities take years to build. And we're still a couple years away from being online for those facilities. So I don't know how you make up that shortfall, which is why I was saying that if that were to happen, if China were to invade Taiwan and say, hey, we're taking over all these chips and you're not going to America, that to me is like, that's like the basis for World War III. Yep, there is one in Arizona. But is it fully up and operational right now? I know they were building it, and they're building Intel ones. They're building other Taiwan TSM factories, but I don't think it's done yet, if I'm not mistaken. I could be mistaken on that one, Margaret, but I don't think that one is up and running. It's in construction. So yeah, it takes a while for these things to happen. Let's hope, Paul, that it doesn't happen, because that could be a massive disruptor to our financial markets. And the reality is, I hate to say this, Oliver, close your ears. Close your ears. Just grab your fingers and shove them in your ears, Oliver. The way our markets have been going, it almost feels like we're about due for a black swan event. We're due for some correction. This is just an unbelievable market that keeps on going and going and going. It feels like it's unstoppable and nothing can stop it. At some point, these types of rallies come crashing down, and I could look at any chart historically. You usually see monstrous corrections in things like this, and we just haven't had one. So at some point it will hit, and hopefully I'll be quick enough to respond and go short. But right now, you just have to stay long. It's just the way to go. And lastly, you had this last comment down here at the bottom. Can you provide a safe website to buy a ledger? Just buy it from the manufacturer, right? If you're buying a ledger, go to ledger.com. If you're buying a Trezor, go to trezor.com, tangent.com. Don't buy them secondhand. Don't buy them from a third-party vendor like Amazon or eBay. Just go to the source. Is it more expensive? Yes. But it's worth it. This is too much money. Oh, Big Up says, so they are producing in Arizona. Okay, good. I didn't think that one was up and running yet. Nice. It needs to cash out and take profit. I keep explaining. Lisa, because we're all expecting the black swan event, is probably why we're not getting one, right? It's never when you want it. It's when you least expect it to happen. Okay, let me go and show you economic stuff for tomorrow, because today was kind of boring from an economic data perspective. Tomorrow it starts to pick up a little bit. Wednesday really is the monster day, and we'll talk about that one on tomorrow. Oh, I'm not doing a show Wednesday. I can't do a show on Wednesday, but real quick, let me get through this. On Tuesday, tomorrow, JOLTS job openings. That happens 30 minutes into the trading day. That's your only big piece of U.S. data, but you also have S&P Case-Shiller Composite 20 home price indexes, HPI data. Just of interest here, we've been watching home prices slowly tick lower and lower and lower since that 2020 peak. Not a great sign for anybody who is a fix and flip investor or someone in for the long haul. So, that is that. So let's go back to my calendar here. And I also have your earnings calendar for tomorrow. I thought I had earnings calendar on here. Real quick, let me bring that one up. Unprepared for today? Say it ain't so. There was Tilray reported today, but that no one really cares. Tilray is such a small cannabis company. But for tomorrow, we do start to see some bigger names. Again, Wednesday and Thursday are the big days. Tomorrow, you've got Visa, United Health Group, you have PayPal, Starbucks, Merck. So it could be a wild ride for UNH. Let's see how my position does there. It could be a bad day. Good news, it's not a giant position. I didn't put that on there. Oh no, sorry, I don't have a position on UNH. It's a MicroStrategy. I got out of my last week. So Starbucks, Merck, Procter & Gamble, UPS, Electronic Arts also reporting. So a lot of big names there. Yay. Big M says Wednesday is golf day. I am in a leadership meeting all day on Wednesday for Trading Academy. So I will not be doing a show on Wednesday. Unfortunately, sorry guys. You have to do without me, especially on the rate announcement day. I will reach out to Bill Addis and see if he would like to come on the show on Thursday and be my guest. That'd be fun. Always great having Bill on the program. We talk about the Fed and what happened there. I think it's going to be a very interesting one to see not only what the dot plot looks like, but what Jerome Powell says about rates. I know that the press conference after it on Wednesday, he's going to be just grilled about Trump and the pressure and resignation, all that stuff. I'm curious what happens there. So. Yeah, the event, Rob, is just a company-wide thing that I really need to be a part of. So, unfortunately, got a no show on Wednesday. But we'll do one tomorrow. I will see you guys bright and or not bright and early, but we'll see you bright-eyed and bushy-tailed for our Tuesday show. If you have something you want me to discuss, let me know. Again, for those sending questions, Paul and Naum and Mark, thank you for your questions. And as always, I hope you guys have a fantastic remainder of your evening. We'll have a great trading day, and I will see you guys tomorrow. Take care.